Let's talk about the markets in 3 minutes. Eddie van der Veld joins us from the Markets Live team to do just that. Good morning to you, Eddie. Let's start briefly on this theme, because for some people this has macro read across, or at least it lifts the tech-heavy NASDAQ, doesn't it?
Absolutely. Those themes that Alex just hit, I think if we see NVIDIA doing well today, if we see some sort of development at OpenAI that investors like, these are companies that have really lifted the broader shares index. We've had Microsoft's up something like 58%. That's beating the NASDAQ, and we've got NVIDIA up year to date 250%. So these are companies that could drive the rally forward, but it all depends on what happens today.
And Eddie, another story that we were focused on yesterday was the 20-year auction, and I'm looking at the US benchmark 10-year, currently below 440 on that benchmark. How important was that 10-year auction? How successful was it? How did the market receive it?
Yeah, the 20-year auction was really interesting because this is a point on the curve that investors are not, they're still sort of getting accustomed to it. It's not one that the Treasury had targeted a lot before. And at the same time, it's a shortened week in the US, right? We've got Thanksgiving on Thursday. And therefore, there was this worry that there's not going to be strong demand for this auction, which could just send the bond rally, in Treasuries into a little bit of trouble. But we didn't see that. We saw strong demand. And I think, therefore, we could potentially see yields coming down a little bit further, and that should ease a lot of the worry that there's been about the stock market and other places.
Yes, and the easing that we see there in Treasury yields then, that filters through the global economy, doesn't it? And that really ties in to one of the concerns that many people have had for a long time, nicely summed up in a big take story today. Higher for longer rates are crushing global real estate markets, and this is something that from a macro perspective you're just flagging once again as something we really need to keep revisiting.
Yeah, absolutely. You know what, the longer end of the curve, particularly those 20 and 30-year yields, feed through into the US housing market, right? Because that's the kind of rates that people will pay for their housing costs. That's the main transmission mechanism for monetary policy. So if those yields start coming down, that will help the rest of the help the rest of the world economy. So yeah, I think this is really important.
And Eddie, just briefly on geopolitics, some reporting suggesting that there may be a pause, a truce, however you define it, between Israel and Hamas, and maybe some of the hostages released as well. There are potential market implications, of course, of the human impact, but also for the markets as well.
Yeah, absolutely. Look, the human impact is first and foremost, but just from a market perspective, we've got, oil prices have given back a lot of that geopolitical risk that was priced into the market. And we've seen gold, on the other hand, keeping a lot of the geopolitical risk priced in, gold prices remaining high. So we will see just which one of those two asset prices are right and which one will give back more as this story develops.
Yeah, really interesting to watch. Of course, the geopolitics, but also the supply and demand dynamics around the oil price. And we're heading towards another OPEC Plus meeting, aren't we, just at the next weekend.